Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm taking a look at the dollar versus Canada, so let's get started. This is the 4-hour chart of the dollar versus Canada. This is the start of the trading week on Monday. The price moved higher yesterday, moved above the 200 bar moving average on the 4-hour chart. You note here that last week the price came up to that 200 bar moving average, found willing sellers against it, moved down to this swing area down through here before finding support on Friday's trade and moving higher into the close. The break above that 200 bar moving average was met with more buying, but we did find willing sellers against the 38.2% retracement on the first look right here. Price came back down, retested the 200 bar moving average right here before moving to the upside. And then trading today, the price has continued to run to the upside, getting above the 38.2% retracement and also getting above this green line right here. This green line represents the 200-day moving average. And the price broke above that level earlier today in the European session and moved up to a new high near, I guess, the 135 level before rotating back to the downside. Admittedly, over the last few hours, the price has been trading above and below that moving average. You can see right here where the price moved above and below the 200-day moving average, 1, 2, 3 separate bars on the 4-hour chart. So it's been going on today, including in the U.S. / North American session. So that's a bit disappointing from a technical perspective. You'd like to see the break of the 200-day moving average ignite new buyers or sellers leaning against that level and pushing the price back to the downside. Today we're seeing both of that. Which is suggestive of the market really doesn't know what it wants to do at this point. So it is trading in a volatile up and down fashion. So we still have to pay attention to that moving average level. With the price currently below it, the bias is kind of shifting to the downside. But we then need to get back below the 38.2% retracement, stable level at 134.52 to give the sellers more control, more confidence that the price high has been reached. Alternatively, if we do break back above the 200-day moving average, you got to go with the flow, and the bias turns more positive from a technical perspective. And we look toward the high for the day near the 135 level, and then above that, this swing area through here, which is sort of a modest level, but a level that was initially support right here. Again, this is the 4-hour chart, so a number of different hourly bars, and then was resistance before becoming support again here and moving to the upside. So but we broke below it, came back above it, and moved higher. In trading over here, we fell below that level and also was testing the 200-day moving average and then used the level as resistance before moving to the downside. So that would be our next target at 135.17 on the top side, but followed by the 50% retracement of the move down from this high price going back to, I guess that's early November, to the low price that we saw in December. So there you have it, a technical look at the dollar versus Canada. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.